As the world battles an energy crisis amid the ongoing West Asia war, Iran is reportedly considering a striking proposal. According to the latest reports, Tehran may permit some oil tankers to pass through the Strait of Hormuz, but only if the oil on board is traded in Chinese yuan instead of US dollars. Yes. And that idea could have significant consequences for global energy markets. For those wondering, the Strait of Hormuz connects the Persian Gulf to the Gulf of Oman and from there to the rest of the world. And despite being relatively narrow, this is one of the most important oil transit routes on Earth. A massive share of the world's crude oil shipments move through this passage every single day. Which means anything that disrupts traffic here immediately shakes global energy markets. And if the oil being shipped through here is sold in Chinese yuan, it'll have much larger consequences. Because for decades, the global oil trade has been overwhelmingly conducted in US dollars. It's part of what many analysts call the petrodollar system. Almost every major oil deal around the world, whether in the Middle East, Europe, or Asia, is typically priced in dollars. But Iran's alleged proposal would challenge that system directly. If the rule were enforced, tankers wanting safe passage through the Strait of Hormuz might have to conduct their oil transactions in Chinese currency instead. And that fits into a much larger global trend. For years, Beijing has been pushing to expand the international use of the yuan, especially in energy trade. China has already explored buying oil in yuan from major producers like Saudi Arabia. But the reality is, the dollar still dominates. Even today, only a small portion of global oil, including some sanctioned shipments from Russia, is traded in alternative currencies like the yuan or the ruble. So the global oil system still runs largely on dollars. And all of this is happening at a time when tensions in the region are already running high. Disputes involving Iran, the United States, and Israel have already made shipping in the region more uncertain. That uncertainty is pushing oil prices higher. In fact, global crude prices recently climbed to their highest levels since 2022. Brent crude has been hovering close to $100 a barrel, and US benchmark West Texas Intermediate has been trading around the mid-$90s range. Prices dipped slightly toward the end of the week, but they're still on track for strong weekly gains. So what does all this mean? If Iran actually moves ahead with this policy, the Strait of Hormuz could become more than just a shipping choke point. It could become a financial checkpoint. A place where the currency used in an oil deal might determine whether a tanker gets through. To recall, the current crisis began after Iran's Supreme Leader Ayatollah Khamenei was killed in a US-Israeli strike late last month, triggering retaliatory attacks across West Asia from Tehran. We will continue to track this story, but do let us know your thoughts on the fallout of the Iran war.